Hello, everyone. Welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Samir Aggarwal, who is the founder of RevFin, which is India's #1 electric vehicle financing startup. Hi, Mr. Samir. Welcome to ELI.
Hi, thank you for having me here.
I would request you to introduce yourself to our audience, please.
Sure. My name is Samir Aggarwal. I'm the founder of RevFin. I come from a professional lending background. I've been in lending for about 16, 17 years now. Started RevFin in 2018. Prior to that, worked in banking for about 12 years.
Mhm.
RevFin is obviously a digital lending platform. We provide loans for commercial electric vehicles, mainly focused on two-wheelers and three-wheelers.
Mhm. Got you. So the first question comes to my mind is why lending to electric vehicles only? Why not all the vehicles?
Yeah, so actually, it's very interesting. When we started, the main idea was to focus on segments that don't get access to credit.
Mm-hmm.
And people don't get access to credit for a variety of reasons. You know, they don't have credit history, they don't have banking transaction data, they have very low level of education, and so on and so forth. But one very interesting aspect about electric vehicles was that no financier or lender was actually financing electric vehicles also 5 years back.
Oh,
So
wow.
as a segment, electric vehicles were completely excluded from lending. Even today, financing is one of the biggest challenges
Mhm.
in electric vehicles
Why
because
is
adoption
that?
of.
What's the reason behind that?
There are several reasons behind that. First is that electric vehicles are a new product with new technology that is not tested and proven over a period of time. So
Mhm.
there is a tremendous amount of risk that a new product brings in, which lenders are not ready to underwrite at the moment. That's one.
Right.
The second is that there is no secondary market, right? So if you get a vehicle back, there is no place to sell it, and you don't even know for what price it is going to sell. So that was the
Mhm.
second problem. And the third problem that we saw was that a lot of people who are taking electric vehicles are people who are generally financially excluded. They are bottom of the pyramid. So they have very poor or no credit history. So it's very difficult to underwrite those people as well.
Mhm.
And finally, the fourth problem was the market was extremely fragmented. Electric vehicles and especially three-wheelers, they sell all across the country. They sell in small tier two, tier three towns, tier four towns in UP, Bihar. There's a huge adoption in those towns. So it's very,
Mhm.
very difficult to actually set up a distribution network in all of those places. So these were some of the challenges in the market.
Got you. Can you tell us about the inception of Refin? What was the idea, situation, or what triggered this idea in your head, and you went on to uh, build this company?
So actually, so there are two sort of different trigger points. One is a trigger point where I decided that I wanted to do something of my own. And that really happened when I came to know that my wife is pregnant with my first child. That's when I thought I really need to do something different with my life.
Mhm.
So that was a trigger point. But also, I was working in the banking industry in London. And in my last 2 years, I was working with what was classified as the subprime segment. People with
Mhm.
no credit history or people with very poor credit history. Um, and I realized it's very difficult to give loans to that customer segment. Even in a developed country, it becomes very, very challenging. And I just
Mhm.
thought that that opportunity is so much larger in India that I decided to come back and start my venture, focusing on people who don't get access to credit.
Okay. Refin has a very unique approach to underwriting the loans. So incorporating biometrics, psychometrics, and gamification to the loan process. So, can you talk about these methods and how they have enhanced they are better over the traditional underwriting processes?
Absolutely. So first of all, when you look at a customer segment that is near bottom of the pyramid, who's never taken a loan in the past, who has no banking transactions, it's very difficult to underwrite that segment. But from my experience, I basically understood two things about this segment. One is that there is no third party data available about this segment. So
Hmm.
you have to generate data as part of the loan application journey if you want to use data for underwriting.
Mhm.
The second was that since there is no financial history, there is no credit history, loan performance history, you have to basically, instead of looking at past credit behavior, you have to think about human behavior or personal behavioral traits that have a direct correlation with repayment performance.
Mhm.
So when you match the two things, we thought the best thing to do is to look at psychometrics. Psychometrics would give us some idea of personal behavior or personal traits that would have certain correlation to intention to repay. And psychometrics is a process or a test that you can conduct as part of the loan application journey, right? And
Okay.
then therefore you can digitize that whole journey. So that's
Mm.
how the thought came together. And then we said, no, psychometrics may not be enough. We said we'll also use biometrics. We'll use telematics in vehicles for vehicle behavior, driver behavior. We use
Mm.
gamification to influence customer behavior. So it's all focused towards different behavioral aspects. So that's how we underwrite. Now, how does that compare to traditional methods? I would say it compares really well with traditional methods of underwriting using things like credit history data. We've looked at overlaps between or customers with overlaps between psychometric scoring and traditional credit history based scoring, and the results are very good. It overlaps completely. So on a set of customers where there is no credit history data, this information can be easily applied.
Got you.
And the outcome has been very good. Our NPAs or non-performing assets or non-performing loans have been very low, even
Mm.
despite the customer segment that we operate in, really near bottom of the pyramid, people with no credit history. Our non-performing loans have been less than 2% in the last 5 years.
Got you. Can you also discuss the significance of your partnership with the Shell Foundation? How does this collaboration work towards promoting sustainable employment in tier 2 or tier 3 cities?
Yeah. So I think the project with Shell Foundation was very clearly to jointly generate employment opportunities for people in small towns using electric vehicles. So that was the basically problem, that you have to use electric vehicles to generate employment.
Mm.
And that had a very good overlap with our business, because that's what we do. We give loans for electric vehicles, and they're all commercial vehicles. So it actually generates employment. The other good thing is that, as a business, we focus on lending more to tier 2, tier 3, and tier 4 towns. In fact, 96% of our customers are from tier 2, tier 3, and tier 4 towns. So in that
Mm.
sense, there was a very good overlap between the objective of Shell Foundation and what we actually do as an organization. So that's how we collaborated. This was a few years back. And yeah, so that's how the journey started.
I read somewhere you lent through your own NBFC subsidiary. Can you tell us more about this decision and what are the benefits of doing that? Because most of the fintech players, they depend on third party NBFCs to do the back end side of the job. So tell us about it.
Yeah, so I think, I come from a lending background, and from my perspective, my experiences and my understanding, I was clear that we as an organization should own the customer that we are lending to, and we should own the risk associated with that customer. We
Mm.
were entering the market trying to underwrite the customer in a very different manner. And we did not expect other lenders to understand how we underwrite and why that method would work. So you're very clear, we will actually lend through our own balance sheet, we will take our own risk, and we will prove that our methodology or our approach to underwriting is far superior to anybody else's. And that's what we've been able to prove. Now, as a result of that, what has happened is that obviously we've got an NBFC, we've created a balance sheet, or we've created a loan book for ourselves. The returns that we get on our customers are far superior to what any fintech would get.
Mhm.
Also, we are able to protect our business model a lot more because we're not exposing it to any external lenders as well.
Got you.
And
Well.
I think I'll just add a third point, which is that there's a lot of regulatory changes happening now. A lot of fintechs are under a lot of regulatory pressure, and perhaps a lot of fintech companies would end up getting their own licenses as well for operating as NBFCs. So we actually took that decision obviously much earlier. And today, if we were to make that decision, it becomes all the more challenging to get a new license.
Hmm. You mentioned that RevFin is a completely digital platform. Having said that, I think RevFin uses complex algorithms for decision making. How do you balance the use of technology with a personal touch? that is often required in financial transactions and doing financial things?
Yeah, so actually, when we talk about digital platform, we are onboarding the customers completely digitally. So the entire loan application process, the underwriting, everything is completely digital. Which means that once a customer, in the first part of the customer's journey with us, it's a completely digital process.
Hmm.
And that means that the process is very, very quick. It's very, very convenient for the customers. But once the customer has been approved for a loan, then of course, from that point onwards, there's a lot more deeper interaction with the customer. We have calls with the customer. We do video calling with the customers. We also do house visits if required. And then obviously every month we are in touch with the customers for loan performance, repayments, and so on and so forth. Right. So the thought was that the initial part, the initial part of the journey should be very, very convenient for the customer,
Hmm.
and they don't necessarily want to have a relationship with us during that stage, unless, of course, we give them a loan.
Right.
That part is digital.
Got you. So I think you also maintain a very strong relationship with the partners and OEMs, like the bike manufacturers, the fleet operators, and some e-commerce companies. So how does it play out in your ecosystem?
Yeah. So because we finance electric vehicles, and because there is a lot of risk associated with electric vehicles, as I was explaining earlier, what we decided as an organization is that we will build a very, very strong ecosystem around the vehicle and the driver.
Hmm.
Right? Which means that whatever the driver needs, whether it's after sales service support, spares, repair, charging, employment opportunities, insurance, telematics, whatever they need, we will create an ecosystem around that driver and vehicle.
Hmm.
And therefore, we started developing partnerships. Initially, we started developing partnerships with OEMs, which basically meant that they gave us access to a lot of their dealerships. So therefore, from our perspective, we could also grow much faster because one partnership gave us access to dealerships across the country rather than going and kind of partnering with individual dealerships.
Hmm.
But from a customer perspective, it also meant that the OEM, because they have an agreement with us, they will support our customers or our combined customers a lot more than they would normally do by
Hmm.
giving them access to all sorts of service support and so on and so forth.
Right.
Then we also partnered with dealers. There was no secondary market. So we went to the dealers and we created a secondary market with them. We said to the dealers, if a vehicle gets repossessed, we'll bring it to you, you refurbish it, and you resell it through your counter. So that created a secondary market as well. Then we partnered with fleet operators. One as a method of sourcing new applicants or customers, but also as a means of providing employment opportunity to the customers. We partnered with aggregators. We partnered with insurance. Insurance was a very, very even today, I think getting access to insurance is still challenging in this segment.
Hmm.
And not only that, I think getting an insurance claim is extremely challenging.
Yeah.
But we've been able to create good partnerships where getting insurance covers as well as getting claims have become a lot easier now. Then we embedded telematics into the vehicle, so the vehicle performance could be tracked. Drivers could see what they were doing. So we decided that we have to build this ecosystem because it's a new emerging product, and we have to create a very, very, very strong ecosystem around the driver and the vehicle.
I think you would agree that every startup has 2-3 phases. One is 0 to 1 journey, when you are just building things without expecting anything. Then 1 to 10 journey, where you are proving that your the engine works. And then finally the 10 to 100 journey, when you scale up. So the 0 to 1 journey is the most difficult, as per me. Tell us about the 0 to 1 journey of RevFin. How were the initial days? How did you sell the first, or how did you finance the first few vehicles? How did you find first few customers, and who were the initial people? How did you find them to join with you to build the initial stack?
Um, so first of all, yeah, I mean, I agree with those phases. I'm not sure 0 to 1 is the most difficult because ultimately when you're starting up, it's also a lot of fun. So zero to one is also the most fun and not just difficult.
Yeah.
But having said that, I think if you I think from our perspective, obviously, I don't come from a business background, family wise. So for me, I didn't know what needed to be done. So started, getting in touch with people initially, how to even set up a company, what to do, how to register a company, then what all needs to be done. Started with that. Gradually started talking to people about raising some money. Spoke to them about my idea, and I think for me the biggest realization was that once you make a decision and you get into it with your full heart, everybody around you comes together to help you succeed. And
That's
that
true.
was a huge realization for me. And wherever I went, whoever I met, everybody would tell me or give me ideas of how I could do things better, what I could do, put me in touch with more people to raise funds or to do partnerships, etc. So the whole sort of everybody around me came together to help me and to start up initially. And it was very interesting that when we started, obviously we needed money to start because NBFC money is a capital intensive business. So you need to
Hmm.
have a lot of money to start. So a few friends, family members, and then their friends and family members came together and pulled in our first set of capital, which we then raised and we used basically to do our first set of loans. Once that happened, then obviously did a little bit more of that. Also initially, hiring hiring people was very challenging. So again, uh, um, a lot of my friends helped me in that. They gave me references, to hire people. So we started with a team of around 4 or 5 people, mostly in technology, right, for the first 6 to 9 months. Yeah, so and we had a small office set up. And for the first 6 months, quite honestly, we didn't do any business. We were just building our technology and looking at acquiring an NBFC license, looking at raising our first round. So that was a lot of fun, a lot of thrill, but a lot of uncertainty. I wouldn't say it was difficult. I would just say there was a lot of uncertainty around it, that what
Okay.
is going to happen. But I think once all of that was done, we were able to build or get the first product out, and that 0 to 1 journey happened. It took us about 6 months.
Mhm.
It was, as I said, a fun-filled 6 months, and uh, yeah, so that's how it was for us.
Any major pivots that you did along the way?
I would say yes. I mean, one major thing we did when we started initially, we were not focused only on electric vehicles. We were doing other things as well.
Hmm.
But electric vehicles was one of those things. But in the first 5 6 months, we realized that um, electric vehicles was our calling. That's the segment we wanted to focus on. That's the segment we wanted to scale. So after about 5 6 months of operations, we said now we focus purely on electric vehicles. So that was, I think, one big pivot for us.
What were some of the biggest challenges that you encountered along the way? Uh,
So I think on the from a perspective of building the company, there have been two big challenges that we faced. One is raising funds, and second is hiring the right set of people. Raising funds, especially initially, was very challenging. It was challenging because we were building a technology that was very new in the way we were underwriting. Also because we were financing electric vehicles and people had not experienced electric vehicles so much. So there was a lot of uncertainty around them. So again, that was a challenge. So raising funds was very challenging for us in the first 2 years. And that also meant we were not able to scale a lot in the first 2 years.
hmm,
So I think that was a big challenge. But I think we've gradually overcome that challenge now. In terms of hiring people, I think that's a constant challenge that never goes away. As the organization scale, our need for talent keeps increasing, and it's very difficult as a startup to attract the right kind of people. So I think that's been another big challenge. So that's on the business front. Obviously, personally, there are a lot of other challenges. You go through a huge financial crunch and a lot of anxiety, a lot of pressure from everywhere. So I think that's also been a challenge, but I think, yeah, one deals with it.
hmm. Tell us about the customer acquisition process. What are the different distribution channels that you have, and what is the cycle? How much time does it take to acquire a customer? And yeah.
So our customer acquisition is done mainly through our partners. So we partner with OEMs, with dealers, with fleet operators, aggregators, etc. So a lot of, if as an example, if somebody goes to a electric vehicle dealership and they're looking for a loan, then we would be present over there. I mean, not physically, but at least we have a partnership with those dealers, and then they would introduce us to those customers. So that's primarily the way we acquire customers. Once somebody's decided they want to take a loan with us, they can download our app and apply for a loan. The whole process from start to the time they get a decision, the decision comes in real time, but that whole loan journey takes about 15-20 minutes. So in 15-20 minutes, customers know the outcome of their loan.
Okay. Any growth hacks that you deploy to quickly acquire customers without investing a lot?
Yeah, actually, I think okay. I think I realized at one time. I mean, we made a very significant change to the way we do things. You know, once a customer gets approved for a loan, for a vehicle loan or vehicle financing, you have to basically offer or provide the dealer with a dispatch order that now you can dispatch the vehicle to the customer. It was taking us about average 7-8 days to do that.
Okay.
And one day we were just sitting and chatting, and we said, "Yeah, why is it taking us 7-8 days? How can we cut down the process?" And then I just said to the team, let's do this in 1 minute. Let's cut the time from 7-8 days to 1 minute. And then we said, let's take 2 days to figure out how we can do it in 1 day. Or sorry, 1 minute. And over the next 2 days, we just looked at our entire process. We rejigged the whole process to figure out what we could do. And not 1 minute, we were able to offer it in just a few seconds.
Oh wow.
And there was nothing we had to do, literally just shift a few things around in the process.
Interesting. So coming to the last part of our discussion, tell us what is the meaning of entrepreneurship for you? How would you define the term entrepreneur? Who is an entrepreneur?
Okay, so I think for me, entrepreneurship basically means that you are solving a problem in a very innovative manner, such that the outcome of that is a huge impact in the lives of people, right? So that's how I think of entrepreneurship. So pick up a problem, solve it very innovatively, and create a huge impact. I think that's the purpose of entrepreneurship.
What are the skill sets required to become an entrepreneur? Who would think that, yeah, this is something I have, so I can become an entrepreneur?
Okay, so my own assessment is that there are 5 things that one needs to become an entrepreneur. The first is courage, and that's the most important. That courage that I want to do this, I can do this. Second is vision. By vision, I mean you have to be able to see something that other people are not able to see a problem or find a solution that other people are not able to. Third is ambition. You must want to achieve something. It doesn't matter what it is, and it may be different for everybody, but you have to want to achieve something. The fourth is instinct. Instinct is very, very important because we have to be able to. Instinct just generally means that you have to be able to make very, very quick decisions and make more right decisions than wrong decisions. Right, so that's instinct. And last is perseverance. You have to just keep going on and on and on. Those are the 5 qualities of an entrepreneur.
Okay. My final question, tell us one interesting lesson that you have learned during your entrepreneurial journey that we can also apply to our ventures.
I don't know. I mean, I just, a lot of people ask me how my journey has been, and do I ever think, why did I do this? Why did I get into this? And it's very surprising, but there's not been one moment that I can think about where I've said to myself, why did I do this? Right. So my only, I think for me, the main sort of takeaway is that entrepreneurship is a very, very fun-filled, interesting, adventurous journey, and one has to really experience it to know how thrilling it is. So if you have even the slightest inkling to be an entrepreneur, you must try it.
Well, on this note, I think it's time we'll wrap up the discussion. Thanks for your time, Mr. Samir, and it was a pleasure to have you on our platform.
Likewise. Thank you very much.